I'm Daniel Beer here with Todd Cannon, and this is Real Estate Exposed on Sunday morning on News Radio 600 Kogo. If you'd like to call in, ask us a question, we'll take it right here live on air. The number is 800-600-KOGO. That's 800-600-5646. Or maybe you prefer to reach out to us off air and discuss something more private. And if that's the case, you can also call 858-356-2020. That's 858-356-2020. So I'm right here with Todd Pianin, my co-host, and Todd, he's one of Southern California's leading mortgage bankers. He helps people all across California, and he actually happens to be the president of Samuel Scott Financial, and they're an awesome and just an incredible company. My team, we love working with them. They're one of the lenders that we really enjoy working with, and man, I'll tell you, it makes life easy and especially nice when you have happy clients. So. All the reason to do it. And their company actually was even named one of the top places to work by San Diego Magazine. So it's a privilege to be here with you, Todd.
Thanks, Dan. It's a privilege to be here with you. I'm here with Dan Beer. He's he's the leader of Dan Beer and Associates at Windermere Homes and Estates. His team is amazing. Him and his company is amazing. Last year, they sold north of $60 million in real estate. We do a lot of business with you, Dan, and we love working with you. I mean, all of the clients you send us, we seem to be super excited to be working with you and your team. So we're super excited to be here.
Cool.
Super excited to be here with you, actually.
Well, thanks, Todd. It's always good to see you on Sunday morning. I'm looking forward to doing this. So, this show is Real Estate Exposed, and it's called that for a reason. We're going to put the truth out there about a lot of different topics that aren't sometimes ever discussed in the real estate world. It can be very murky. There are certain practices that are just not always to the consumer's advantage or with the consumer in mind. And that's what this show is all about, is helping you identify those things, helping you take advantage of things that consumers that are not listening to this show can't see, don't know about, or just aren't, simply not aware because they're not here listening like you are and educating themselves, but also helping you take it, not be taken advantage of. And that's when we discuss topics like last week's discussion regarding why some agents will take an overpriced listing, knowing it's never going to sell, inconveniencing you, but using it to leverage your home to create more opportunities elsewhere with other buyers and sellers.
I have to tell you, all the calls I got this week, Dan, about that was amazing. They said the experience and the information that you gave to them on how to really pick the right realtor to work with just blew them away, and they really, really were impressed that we were actually doing this show and kind of pulling back and showing what's going on in the real estate world.
That's awesome. That's awesome to hear. And because that's what it comes down to. We're going to expose the truth about the industry. Sometimes it's going to be pretty, but other times it's not. And
sometimes it's not going to be pretty about either one of us, right?
But it's always going to be straightforward, and it's always going to be real. So this is Real Estate Exposed with Dan and Todd, and we're going to jump into our market update, leading off with what's happening in the mortgage markets.
So mortgage markets this week, we opened up lower. I mean, we're talking very low, people. We're talking that we saw rates dip back to the lows of the first of the year. Then the market sold off midweek, and then we saw rates end the week where they started the week. So it was actually pretty exciting for a lot of my team, because we're seeing interest rates back in the 3 3/8, 3.5 range, to
That's
3,
awesome.
Which is really awesome. And the VA is back down to those levels, which we always talk about how important veterans are to our industry and to our country. We're also seeing jumbo money, starting to breach under 4% again. So we're super excited about that as well. I can tell you that mortgage sales volume has exploded. I can tell you that on the buyer side, on sales side, I mean, as a company at Samuel Scott, we're going to close about 85% of our business this month is going to be purchases, not refis, which tells me that
even with the low rates, they're still being outweighed by purchase business.
Purchase business has gone, through the roof. I think that people have finally realized that, we're hitting the lows, and now is the time to buy and then maximize the most they can out of their dollars.
Very cool. And so, a question I have for you that actually leads into my portion of the market update, which is we have such low inventory. So, even with that low inventory environment, there is the purchase side of the industry then, or the mortgage markets are still in very high demand.
Yes, they're still in very high demand. I would say to you that the problem that we're seeing is that we're seeing more buyers out there than sellers.
Okay, awesome. Well, here exactly. You know what? That's exactly what we're seeing, Todd. So recently, I was I had to write an article for a newspaper that gets published, and it's a community newspaper in the 92127 zip code, and that's an area that, you know, some of the better, bigger known communities there, areas like Forest Ranch, Santa Luz, Del Sur. And so I wrote an article covering what's happening with the inventory levels in those marketplaces. So here, and the reason I bring this up, by the way, people listening, is it's not to tell you about those particular neighborhoods, but because what I saw and what I studied and what the numbers showed there is exactly that's exactly what I'm seeing across the entire county.
Right.
And so I'll just give you a few examples on 4 different key neighborhoods within that zip code. And again, this is being mimicked throughout the county. There's a small neighborhood there named Verrazano. And we saw only 2 homes come on the market in January and February combined. Okay, so through the first 60 days of the year, we saw only 2 homes come on the market. And this is a neighborhood of 200 and some homes.
So like 1%.
Very, very low, very light inventory. But in March, we saw 3 homes listed just in the first 22 days of the month. And I say the first 22 days because I did this study on the 22nd of March.
Clear.
Santa Monica, another community or neighborhood within that community, 1 home listed through the first 2 months, 3 in the first 22 days of March.
This goes back to what you talked about last week, Dan.
It goes on. I mean, in Santa Luz, 8 homes listed in the first 60 days of the year. Okay, 8 in the first 60 days. And in the first 22 days of March, 7 homes, new homes listed on the market. So that's just very fast supply side growth. And Forest Ranch probably had the most dramatic change as of the time I wrote this article on 22nd of March, which was that 30 of the 49 homes that have come for sale this year in Forest Ranch were listed between the 1st and 22nd of March. Okay, that's 30 of the 49 homes were listed in March. And that's huge uptick in supply. So how that affects consumers listening to this show is you have to understand the seasonal nature of how people bring their homes on the market and decide to list. Okay, and so right now, there's people in your neighborhood having conversations at their kitchen tables, and it goes something like this. Hey, sweetie. Hi, honey. I think we should sell the house. Okay, but we should wait till spring or summer because supposedly those are the best times to sell. And that conversation's happening all around you right now. And so...
Which you pulled back the truth last week and said that's the wrong conversation to have.
Yeah, but the call to action right now is, you know, this isn't, by the way, any kind of doomsday thing. If it's list now or inventory is going through, that's not what it is, because I've actually revised my prediction of this year. I think it's actually going to be a better year than I even thought. Right. But even within a low inventory market, you still want to sell in the best conditions possibly available to you. And if you're thinking about selling, but you're having that conversation that goes something like, sweetheart, let's wait till May or June, you might want to push that time frame up if your life allows. And if so, you'd want to do that because this trend will continue all the way in through summer until finally people stop having that conversation because they start moving into fall and winter. But again, like we talked about last week, demand in San Diego County is absolutely steady throughout the year, and that's something you're going to want to keep in mind. This is Real Estate Exposed with Dan Beer and Todd Pianin on News Radio 600 Kogo. And when we return, we will have a very, very interesting discussion with you regarding FSBOs and how to sell your home on your own, or if you even should. Thanks. Welcome back. This is Daniel Beer with the Daniel Beer Group at Windermere Homes and Estates, and I am with Todd Pianin of Samuel Scott Financial. And we're going to jump into one of my favorite discussions, Todd.
Well, let's talk about it first. But Dan, give everyone the numbers to call one more time, just so they have them.
Well, if you want to call in and ask us a question, we'll take it right here live on air. It is 800-600-KOGO. That's 800-600-5646. Or if you'd like to call us off air, you can also dial into 858-356-2020.
So, Dan, here's my question for you. And again, we're talking about what this show is all about and how we do certain things. Real Estate Exposed. I see all the time people putting their houses on the market themselves to kind of save their commission, for sale by owners. We call them FSBOs.
My favorites.
Yes. So explain to me, why wouldn't I want to save the commission I'm going to pay you and just put the house on the market myself? I mean, that seems to me like a better idea, saves me paying you. And, I can handle it myself. You don't really do that much, when you list my house.
And I love you being facetious there, but that is the mentality that so many people have. It's, there's just a certain part of the market that is going to be tempted to sell their own home. And frankly, who could blame them?
Well, especially with inventories as low as they are and what you're telling us right now.
Correct.
That things pop up and they sell very quickly.
Correct. And exactly. Who could blame them? I mean, I want to save the commission. You want to save commission. Everyone we know wants to save the commission. Here's the problem, and it's very faulty logic if you think about the actual mechanics of being a for sale by owner and who that means you'll be working with, what their mentality will be, who they'll be represented by or not, what their relationship with their lender is going to be. And it's sometimes hard to quantify all that, especially because we only get to sell our home once. Right. So we don't get to do it one way and the other way and then compare results.
Right.
But it is just faulty logic, especially starting with this point. Okay, Todd, if you go and if you're a buyer, you identify a for sale by owner, you're interested in the home.
How would I find it anyway, Dan? I mean, if I'm for sale by owner, it seems to me that
there's ways. I know there's websites. I think there's one FSBO.com. There's internet sites out there. It's interesting that you're not aware of how to find one,
right?
And that's because you're not the type of buyer that goes out finding them, and they're typically not your most cream of the crop buyers. But so when someone actually makes an offer on a for sale by owner, they're completely aware that the seller is saving their commission. Okay? They're completely aware that the seller is not paying a listing side commission. So
I'm going to offer a lower. If I'm buying a for sale by owner, I'm going to offer a lower price because I know he's not paying the 3% or 2.5% or whatever he's going to pay a listing agent.
Yeah, bingo, right? So he or she isn't going to pay that commission. So if the home was worth whatever it might have been, let's call it $500.
Right.
And you would have typically offered $500 in a normal scenario. Now you're maybe coming in with $480, $485.
Oh, for sure I am.
Right? Because and you might even be coming in lower, but that's what you're willing to pay because he's not paying the commission.
Correct.
So you expect that to fall to you as the buyer.
Right.
But the seller expects that to go to him, and everyone's fighting over the same little piece of commission. Who actually gets to keep it? And sellers don't think of that part of how it's actually going to play out when a buyer approaches them.
Wow. Well, what about? Okay, so I have a question, Dan. So besides the fact that I want to sell the house and save the commission myself, you have a broker you work for, which is Windermere Homes and Estates.
Right.
So the advantage. What's the advantage of if I'm not going to do a for sale by owner or going with a brokerage? I mean, what kind of protection do I have with that? I mean, there's got to be something there's got to be a reason why you're not the Dan Beer Group.
There's all kinds of liability issues, liability reasons. There's it's very easy to sue somebody in this country. It's very easy to make a mistake. It's very easy to fumble up the dozens and dozens and dozens, and I might even be understating it. It might even hit 100+ documents that are involved in a transaction. And that is what you hear a lot of agents, because obviously it's in an agent's best interest for you not to sell your home by owner. And most agents can only articulate the fact that, hey, you're gonna do better with an agent, you're gonna do better with an agent. But really, thinking about that discussion of who's actually going to save the money, and keep something else in mind. If it's a 6% commission,
saving the money can be one thing, but also protection too. If they
can far exceed the commission,
correct,
completely far exceed the commission. And what is the person even really trying to save, right? Because if it's a 6% commission, they're already agreeing to pay, let's call it 3% to the buy side. So they're really only working on saving 3%,
right?
And then there is that entire discussion of that 3% is going to be fought for by the buyer. Okay, and it's a swap meet mentality, right? If I go buy jewelry at Tiffany's for my wife, I'm going to pay what I'm going to pay ticket.
You're going to pay. Pay Tiffany's. Yeah.
I'm gonna pay retail pricing.
Right.
And it doesn't.
But she's going to like the blue box.
She's gonna love the box. It's gonna make her feel. Yeah. It's gonna. Yeah. Exactly. Well, it's a whole nother show and discussion, and I'd love to have it. But if I go to the swap meet
and you buy a faux Tiffany.
Well, the house is a real house, right?
Right.
But if I go and buy it at the swap meet at the for sale by owner market,
right,
I'm not ready to pay full price anymore. No, I'm not ready. I'm suddenly a much more difficult buyer. And by the way, who are these buyers? Who are these buyers? Because the best, most qualified top buyers out there in the marketplace are working with top level professionals, both on the real estate and the mortgage side.
So can I ask questions? The Dan Beer Group, do you guys show for sale by owners?
We don't, and we don't not because it's a policy of ours. It's not that we wouldn't. If our buyer came up to us and said, "Dan, here's this house. Will you go and show it to us?" Of course, we'd show it.
But if you sell that house, Dan, for the sake of argument, the liability, if there's any liability, doesn't it also fall upon you as being attached to a brokerage firm?
Exactly. So what we do is
more liability for less commission.
We're a lot more likely to go out there and produce inventory, produce a listing by knocking on doors, mailing, calling, doing what needs to be done to find a home in the neighborhood that the person, that buyer is looking to purchase in, versus working with that for sale by owner, because that for sale by owner didn't become a for sale by owner by accident. There's probably so many traps in that entire process,
or misconceptions by the seller.
That's right. But
I mean, let me ask this question: how many times have you taken a listing that was for sale by owner?
I don't know that number, but we've done it a number of times, and it's actually one of the things we specialize in. We have a wonderful, testimonial review that's up on our profile on Zillow from a guy that we sold his condo in Pacific Beach. He netted more than what he was even trying to sell for on his own, failing at it for 6 months.
Wait. Hold on, Dan. What you're telling me right now is this for sale by owner seller was planning on selling his house himself, saving your sell side commission, and you brought him more money to his pocketbook.
Took out removed liability off his plates. There's a million reasons.
But you got more money.
He ended up with more money, and that's where that's where I keep coming back to is, even if you're going to say, well, I can take on the paperwork, I don't care about the liability, even if that is the direction you're thinking in, you just want to understand the profile of the buyer you're working with. I guarantee you the best buyers in this marketplace that are qualified, that have their loan in place, that are ready to close, that aren't going to, just the best of the best out there, they're not at the swap meet. Okay, they are shopping with absolute true professionals. And Todd, I don't know if you can share an experience or just what it's like even doing a loan for the type of buyer that goes after a for sale by owner. And it's not going to be pretty. It's
not your typical buyer. They don't know all the there's no one really holding their hands. They don't even understand what title insurance is. They don't understand how escrow works. They're trying to save money on every angle. So it's not a buyer that, Samuel Scott really, we'll work with them. We do some business with them all the time. But our niche is really working with, getting referrals from our realtor professionals.
Yeah. So what you end up having is an environment where you have a seller and a buyer all fighting for the same 3% commission.
The save dough.
But who's actually going to save it? And let's just for argument's sake say that it's split between the two of them. And then, somebody ended up negotiating terribly for themselves. It might have been the buyer, it might have been the seller. Somewhere along the line, there's just simply a lot of waste. There are casualties in that process, and that's just what you want to think about if you're really going to be a for sale by owner. And once you kind of boil it down to the fact that you're you're probably not actually trying to save 3%, you might be trying to save 1%, 1.5% by the time this all gets split up. And what's 1 or 1.5% on a $500,000 deal? Let's say it's $5,000. And if you won't buy into the fact that a professional would save you much more than those $5,000, even just in the liability side of it, Well, my friend, good luck on the for sale by owner market then.
Exactly.
I'm Dan Beer with Todd Pianin. You're listening to Real Estate Exposed on News Radio 600 Kogo and iHeartRadio. Hi, I'm Dan Beer here with Todd Pianin. Dan Beer of Daniel Beer Group at Windermere Homes and Estates, Todd of the Samuel Scott Financial Group, and we're on Real Estate Exposed, News Radio 600 Kogo. If you want to call in, ask a question, the phone number is 800-600-KOGO. That's 800-600-5646, or you can also connect with us off air at 858-356-2020.
So here we go, Dan. We're gonna do the unintentional but intentional plug. So a client that you actually had sent to us last month said that they've been working with another real estate agent for about two other real estate agents for about 3 years, and they couldn't find homes. And you took them out. They actually wrote an offer on one of your listings, and they were impressed by how you handled yourself, but they didn't get the house. But they decided to go out on a Saturday with you and look in the neighborhood they wanted to move to. And you showed them a few homes. They couldn't find a home that they wanted, but then you left them, and you were driving down the neighborhood. It's from the client's mouth, is what they told me. You were driving down the neighborhood, so knew a house was coming on the market, knocked on the door to see if you could show it to them as, before it hit the market, and then you went out in the middle of the street and flagged them down to come and see the house. And I have to tell you, tell me what went through your head right there? I mean, how do you go knock on a door of a house that you knew was coming on the market, and then have I hate to say it, the energy or the
chutzpah?
The chutzpah. I was going to say chutzpah. The balls to stop to flag them down in the middle of the street, and to get them into the house after you got permission to show it to them. Well,
I mean, these people have just been down a really long, tired journey. I actually met them. It was an open house that I was holding for one of my sellers. But they actually came into that open house with their own agent and wrote an offer through an agent that they'd been working with. And
for 3 years, by the way.
Right. They've been working with that person for 3 years. And really a nice person. I mean, nothing more I'm going to say about that.
Right.
But anyhow, they presented an offer. They didn't get it. And just the way it goes, because we generated 3 offers, they were all over the asking price, and we got that home sold, and that's just the way it went. And for whoever's wondering out there, no, it did not go to one of my own clients, so that's not the reason they didn't get it. It just simply another person represented by another good agent.
It's not how you
just simply won the listing.
That's not how you work, right, Dan? I mean,
no.
No. Yeah, you don't.
And so what happened, actually, to my surprise, truthfully, I didn't really think too much more about them until I got an email from them about, I'm going to say a week or so later. And it was kind of a distraught email about how they felt they hadn't been represented correctly by their agent, how they just, they would have been willing to step up and make it happen, but they weren't, that wasn't completely communicated to them by their, past representative, and that they just wanted to find and explore new relationships. So what we did is the same way we start any relationship with any buyer is inviting them into the office, having a consultation, sitting down, and really exploring whether or not they'd be a good fit for us and we'd be a good fit for them. And if we could, there's obviously something they felt they were missing in the relationship, and see if we could provide that for them or not. So yeah, they came in. We had a great meeting, and we did decide to, they did decide to engage our services in a buyer agency relationship.
But what really impressed me, Dan, is after you showed them the houses and you knew how distraught they were about not finding the right house for them that day.
Yeah.
How'd you get the chutzpah to?
You want that?
I want that piece.
Well, we went out. I said, I needed to deliver what I told them. So when we sat there, I said, okay, you're going to now find the home you want. We went out. We took a look at 2 different homes that I thought might really fit them perfectly. And I'll admit that I missed. On one of them, I knew I was taking a bit of a chance. The other one, I actually thought they would completely love. But it turns out I missed, and it wasn't what they wanted. But in that process, I figured out exactly what they did want. And so Well, the way it went is we ended we ended that second showing, said goodbye to each other. Said, well, I'll call you tomorrow. I'll find something else, etc.
Did you think that you were going to like lose these guys?
No, not actually for a second. But I drove off, and as I'm driving off, I'm just processing what I learned about them during those two showings, and I'm driving past a house that I happen to know was going to be for sale, but wasn't yet.
Not your listing.
Not my listing. And it completely dawns on, it wasn't my listing. A lot of agents will reach out to us just because they know we represent great buyers.
Right.
And they'll reach out and say, Dan, here's what we have coming. Who's in your database? That kind of conversation. And so I'm driving past this house and I kind of punch myself in the head and say, oh my God, like, how did I not think about this house for them? And so I immediately peel into the driveway, knock on the door. They had been thankfully kind of dragging behind, having a conversation before they jumped in their car because they actually were driving two separate cars, so they were following each other. And then as soon as I got the seller shook his head, yes, I ran into the street and just started waving. There's actually two ways out of that neighborhood, and I was hoping they'd go the way that I was,
the way you went.
Exactly.
Right.
And so sure enough, they came by. They see me just waving like a crazy person. They pull into the driveway, and we take a look at this house before it hits the market, and I help them purchase this home for actually the model match had just closed next door. That's the one I represented the seller on.
Right.
And obviously with the seller, I was incentivized to sell it for the most possible.
Right.
But when I helped them purchase, they actually purchased the model match 2 lots over for $100. Well, let me do the math here quickly. For, roughly $85,000 less than the model match next door had sold for. And they're thrilled. And so, but obviously, there was more to that story.
Right. They also
had to get the thing financed.
They also said to me when they met with me that they said if they didn't get the house because that house had multiple offers or had backup offers on it, and we had to close it in 21 days. Thanks, Dan, on a jumbo loan. That they said that they were always and forever going to work with Dan from the Daniel Beer Group.
That's really, really sweet to hear, and it's just an awesome team effort because they actually had intended to work with a big bank. Is actually going to be Bank of America, and they'd intended to work with them, but then realized quickly that they would never be able to close on time on a jumbo loan for their closing, and it was important that they hit that kind of timing. So we got them introduced to you.
21 days.
And
a jumbo loan in 21 days.
You made it happen. I mean, you guys made it happen. They actually even shopped you against another direct lender or broker. I'm not sure who they were. But anyway, you guys got the deal over B of A and over that other lender. And it was
got docs out before the other lender got their docs out. We got docs out before the other lender was even approved.
It was just an awesome process in general. But that, that kind of sparks a lot of future conversation. Why one lender can perform quickly while another one might not be able to. The benefits of buyer agency and actually meeting somebody as a professional in their office versus just going and, going door to door to door to door. But that's another segment, another time. I'm Dan Beer with Todd Pianin. You're listening to Real Estate Exposed on News Radio 600 Kogo and iHeartRadio. Morning, everybody. We're back. I'm Dan Beer with the Daniel Beer Group at Windermere Homes and Estates, and I'm with Todd Pianin of Samuel Scott Financial. And this is Real Estate Exposed on News Radio 600 Kogo. You can call us here at 800-600-KOGO, or if you'd like to connect with us off air, you can also call 858-356-2020, and that number's good all week, 858-356-2020. And Todd, I want to jump into, just one of my, something that completely boggles my mind. I don't get it. I like to work with people that have just built up a huge degree of trust. What's going on with, can you tell the listeners why, if they're looking for a loan,
right?
This isn't a plug about, hey, call Todd. He's the only person that can do a loan for you. Okay. But why do they probably not want to walk straight into their local bank branch, engage the gentleman who's, sitting there and waiting for someone to walk in and do their loan with that person that they met 1 second ago?
Well, I mean, the quick answer the easy answer is that, we get a lot of clients who say to us, why can't I just walk into my local branch? Why can't I just, go into where my checking account is, my savings account is, and just get a loan from them? Well, they're not set up. They're not mortgage specialists. And so they're not somebody who, their goal in life is just to basically commoditize the business. So their goal in life is to just kind of tell you a rate, get your credit card number to order an appraisal, and to basically get it done that way. I mean, they're not going to. They have no relationship with you as the realtor. They have no relationship with you as the client, except that they hold your money. Mm-hmm. And so it can be a really, really bad experience. We've dealt with a lot of those situations where people are 20, 21 days in escrow and they've gone into a black hole. And
I bring this topic up partially just from a selfish perspective, because if I'm doing business, we're helping a lot of people,
right?
And invariably, it's those that walked into the branch whose loans go haywire, who don't close on time, where we have more problems. There's communication issues, and it's not. From my perspective, at least, Todd, it's not that, it's not that these are bad people or bad workers or anything like that. They're honest, good, hardworking people. I respect them. But it is a very different mentality, for the person that was sitting at their desk and someone walked into B of A.
Right.
Or wherever, whatever bank.
I don't want to use names. Right. Exactly. But one thing you can also understand, Dan, I'll put it to you in real dollars, is that a big bank made $300 million last year in profit on their appraisal company.
On their appraisal company?
On their appraisal company.
Okay.
So that whether they did the loan or they didn't do the loan, they made money on the appraisal.
I mean, it's even just like from my perspective as an agent working with a buyer that's working with this kind of lender, it's just different. That person didn't like fight and claw and risk their money and put their family's entire well-being at risk of being able to acquire and close business and service them properly and create referrals. Like that person isn't going to answer their cell phone when stuff's hitting the fan
at 9 o'clock at night.
Right? That person isn't going to communicate in a systematic fashion with our team. And so
we love those deals. We love those save me deals. Yeah. We love those when people go dark or had that experience because they're the ones that have the best experience.
And I completely get it. You're comfortable with your bank, but at least shop it against another lender. Reach out to a Todd Pian and Samuel Scott Financial. Reach out to a respected lender that you're aware of.
Listen to your realtor when they tell you.
There's a good one.
Because let me tell you, we love you and we love the clients, but your realtor's got multiple relationships with multiple different lenders, and I would want to use who they use because we basically, that we get a lot of business from them. So you can drop the hammer when you need to drop the hammer.
Right.
We have a call.
We have a call from Rich. So, Rich, you're live on the air here on Real Estate Exposed.
Yes. My question is, are there realtors who specialize in homes that might best be extensively remodeled or the lot subdivided and multiple homes built on it?
Absolutely. Absolutely there are. What kind of project do you have in mind?
Well, I'm associated with a property with a couple other owners that probably will likely be sold soon. And the question is to find a realtor who can best deal with this unique property.
All right. What I want to do with you, Rich, is I want to put you on hold and actually have our producer take your information so that we can best help you off air and would be able to make to just put you in the right hands. All right. So don't go anywhere. Just hold on 1 second. Sound okay for you?
Okay.
Okay. Hold on. All right, so Rich is going to get taken care of here, and we'll connect them. But that's a great question because what he's essentially asking is are there specialists that take care of the kind of needs in property, and he understands that that he needs to find a specialist.
Right.
That's what he's.
Which is probably one reason why you have a group, right? I mean, that's the reason why you have specialties. I mean, you work with some buyers, but you have a buyer's team, you have a listing team. I mean, you and I have talked to other realtors across the country. There's a guy in particular, Keller Williams in Phoenix, that you and I both know. And
we both traveled out there to meet with him and learn.
And learn how he did his business. And he's
great guy.
He is a great guy and did over 1,000 transactions last year or something like that.
Something completely mind-boggling.
And the best part of his story was, I said to him at dinner there, and I said, when's the last time you sold a house? He goes, I haven't sold a house in 6 years. Mm-hmm. I have a team that does that.
That's right. That's right. And man, I love this show because there are so many aspects of the business that the public thinks they understand or they think they want, but they don't truly understand.
Right.
Like they think they want to hire somebody that's going to be completely available at every half second that they ever want and do every single part of the transaction and be at every single inspection. But let's peel that back.
Right. We definitely need to.
If you are working with somebody who values their time only enough to go and sit at, say, a termite inspection, is that person... is that really the best high producing? Is that the best use of his time?
Right. There's better uses of time.
Or do you want your agent to actually be back at the office? Maybe prospecting on your behalf, connecting with other agents, tapping into their databases, and making sure that the big picture and everything is taken care of for you, while perhaps somebody that's just somebody on their team or on their staff can I'm sorry to say it this way, but can babysit the house.
Right.
It's the public sometimes demands certain things from their agent, or perhaps even their lender, that is actually in contrast to what is in their best interest. And it's just a funny industry because people are selling multi-$100,000 assets, sometimes multi-million-dollar assets.
Correct.
And even though so much money is at stake, they're willing to do it with the person that maybe's only done 2 or 3 transactions in their lifetime, or maybe only does 2 or 3 transactions per year. They're willing to do it with, their sister Sally or their Aunt Judy. And yet...
Well, they want Sally or Aunt Judy to make a little extra money, so write them a check.
Exactly.
Use a real realtor.
Yet if hundreds of thousands or millions were at stake and any other aspect, right? I mean, whether it be some major accounting issue.
Well, they say the 3 biggest things that happen in our lives: we get married, we buy a home, and we have children.
There's no question. And I've done all 3. So what am I supposed to do with my life now?
Just sit back and relax.
Okay.
and join me every Sunday from 9 to 10 here on the radio.
Just man, you can. That summarizes my life, I guess. I'll go back home and tell my wife that we're done. We're done. So listen, we're out of time. But if you want to connect with us, you can off air 858-356-2020. This is Daniel Beer with Windermere Homes and Estates and Todd Pianin of Samuel Scott Financial on Real Estate Exposed, News Radio 600 Kogo and iHeartRadio. Have an awesome Sunday, everybody.